Right now, euro is retracing now. This is more a product of, is this the euro in retracement mode? Is that a fundamental thing? No. It's just time to retrace. So the technicals are telling us, I don't have a dollar index chart on this particular computer, but my other one, it's, the dollar index is due for retracement. And then at about 84.70, it's going to try, 84.5, it's going to try to bottom out again. It's printing 85.60 right now, which is telling us euro to sort of 28.5. Yeah, it's an element of profit taking or loss taking. It's also a case of everything's out in the open now, right? The QE program has been outlined. Mario's come out and told us how bearish he is. All the dirty laundry, barring a banking collapse, is out in the open, isn't it? So now we know Tiger Woods has had 15 girlfriends. Now we can deal with it. And as a result, there's sort of no additional bad news to be priced in at this point. So it's acceptable for it to be in a sort of retracement mode because there's nothing new for people to price in necessarily. Now, does that mean that it's bottomed? I don't think so by any stretch of the imagination. As far as the dollar index is concerned, I'm looking for sort of 84.5 to 88.40. And that equates to 28.5 to sort of 29 down to 23 on the euro. So to me, there's another leg here that absolutely want to participate in. All right, but now, what happens? So these fundamentals in my mind are good for 6 months. Okay, but now I think that the Europeans left it a little bit late to add stimulus to the economy, but I also think that they have the willingness. Rory is the man now. I also think that they have the willingness to restructure and go through the pain that's necessary to get ahead again. I spoke to a person here in the States a couple of weeks ago, and they said, well, the economy's still slow, etc. And I'm like, yes, because the Americans haven't been willing to go through the pain. And they laughed at me and they're like, oh, but so many people have had their houses foreclosed on them. If you don't pay your home here in the States, just let it go into foreclosure, it has less of a credit impact on you than if you went, say, delinquent on your payments by a month or two and then caught your payments up. You would be more penalized for saving your home than just letting it go to the bank. But the folks here have this mentality of that's pain. Right? Well, I think the Europeans are willing to go through a little bit and have done more historically. Where here in the States, we prefer Big Brother to help us out a little bit and make things warm and fuzzy. And now we're sort of getting this artificial stagnation kind of stagflation thing going on. And I think you'll see noise and a little bit of interest rates heading up, where the Europeans, to a lesser extent the Bank of England, will recover quicker, the Australians will recover quicker than what we see here in the US. So in other words, you'll get more of a transition quickly here. These guys will sort of do this. If anything, we're sort of in this flat. Now we're going to look to raise interest rates, and then you're going to get this sort of thing. And the Bank of England, you'll get sort of the same. At the moment it's kind of in this, and I think you'll get the same sort of look like that. So in other words, the euro is going to go towards 7, 5, 4. All right. And to me, this process could take a long time, maybe 12 months. So really, fundamentally, I think we're going to be doing the same thing for the next 6 to 12 months, and then things are going to start to change. All right. So it makes us, so, what are we going to look for a change? Well, Mario is going to come out and say, well, I'm cutting the QE program. We're starting to see credit improve, blah, 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 blah. You'll start to look at your manufacturing. I mean, the German manufacturing numbers this week were terrible. I mean, you want to talk about the toilet flush of the year. Went kind of under the radar because there's FOMC this week, and it was non-farm payroll last week. But the factory orders on Monday were absolutely brutal. And these are the small little things you're going to look at. I think the euro was fine until it lost Germany. We started to see the French economy tank, the Spanish economy tank, and then, everybody was like, okay, well, as long as we got Germany. And Germany was making noise about splitting, but I think they knew that they were the next. And now you see the German economy slowing down, and that's what really hit the euro. Yeah. And it's the same clues and then everything reverses the same way. So we're going to start to see a German economy improve, and then the French, and then the knock-on effect. As a result, you're going to sort of see this euro improve quicker, I believe. All right, but for now, the aircraft carrier is heading due south. All right, now, if the US, and this comes back to the S&P question, if the US now figures out that they raise interest rates to 0.5 or 1%, bond yields are rising sort of organically by themselves as they should, and the US economy slows and looks like the Japanese economy, which we expect, I don't think the stock market can plunge.